18th century, originated on the battlefield, surgeries, soldiers given a bullet to clench between their teeth to endure pain without anesthesia. First recorded in 1796, it was grit, determination, and qualities that investors need today. Let's talk about that. Dr. Brian Jacobsen, our chief economist, is on the show. Welcome.
Hey, it's great to be here.
You have been on media more than a Kardashian the last couple of days, so we've got a lot to talk about. Dave Spano is our CEO. Hey, Dave.
You know what this is in my hand? This is a bag of peanuts. You want to know why?
No.
Because there's an elephant in the room that we have to start with, and it is certainly, we can't talk about any of these other data points until we talk about what's happening with the market.
Yep.
And we know why it's happening, and because of this concern over tariffs,
Yep.
right? And so we have to understand really what's happening. If you listen to CNBC or anybody else, not including you, of course, right? There are differentiating opinions of what this is going to turn out to be. So let's start with what we know.
Sure. Yeah. So as far as what we know, President Trump came out and he announced these baseline tariffs of 10% that are scheduled to go into effect on, basically April 5th, right? So Saturday. And then we have reciprocal tariffs. So it could be higher depending upon the country's trade balance with the United States.
And let me just stop. There's two buckets, right?
Correct.
There's this 10% bucket, which is going to go into place, which might create all of this revenue.
Yep.
And then there's this secondary bucket, which is reciprocal tariffs. Now, we can argue about are they really reciprocal or not and the math behind that. But that's where the negotiating is going to happen.
That's right. And that's a great way to frame it, because sometimes it's like, well, it's just you've got these big tariffs, they're all reciprocal, and what's the purpose of them? And we know that President Trump, when he was campaigning, he had talked about wanting to put tariffs of 60% on
back
China.
to the 70s.
Oh, yeah.
They're showing videos back to the 70s and the 80s, and Trump was on, all of these shows saying he believes in tariffs. This is not new information.
Exactly. And so in a way, it's a little surprising that people are surprised that he would want to push for tariffs. So perhaps those baseline tariffs, the 10% one, is really fitting with his policy objectives about, you can use these to raise revenue, you can use it to incentivize businesses to reshore manufacturing. But now these reciprocal ones, which are scheduled to go into effect on April 9th, those are the ones that Treasury Secretary Bessent has said that that's the maximum, right? So it implies that there's room for negotiation there. And the way that they calculated it was, let's look at the trade imbalance with those countries and basically have the tariff proportional to that trade imbalance.
Okay, now that's easy for you to say. So there's trade imbalances, and it really is not the tariff that they're putting on us. And so there's a calculation that goes there.
That's correct.
But we put together this scale, and we went base case, best case, and worst case. And what we're seeing is worst case scenario.
Yep.
And as you just pointed out, they can walk it back from there.
That's right.
And the market's now trying to adjust for all of this and digest all of this information.
That's correct. And so when you at the top of the show, you were talking about how the people on CNBC, these massive disagreements, I think the ones who are really thinking in terms of this is like the end point. It's not just the starting point. It's also the end point.
And people do that. People
Sure.
anchor all the time. People anchor with their portfolios.
Yep.
They go, oh my gosh, I'm down 10%. I've lost 10%. You haven't lost 10%. We're getting a price dislocation right now.
Yep.
If there's going to be a recovery, is it a V recovery, a U recovery? We can talk about that as well.
That's right. Or is it the Nike swoosh recovery,
swoosh,
which is
nice
one
job.
that I sort of used during the COVID recovery there, right? Well, maybe it's neither. Maybe it's the swoosh sign instead. And well, think about retail. We'll get to that later, I'm sure, as far as how they've been affected by this, as far as those price dislocations taking place. And the disagreement is, will this cause immediate inflation, so short-term inflation, right? You apply a tax, you have a tariff, that pushes the price level that people pay up. So that immediate change in the price level, that shows up in short-term inflation. But it doesn't necessarily result in persistent inflation. But then what's the growth effect as well? Because you already have some companies like Stellantis said that they're going to be shutting down production for a while beginning April 14th because they're running out of engines. They don't want to import them under possibly higher tariffs, and they need to figure that out, right?
So let me just jump in there. So the idea is that we're going to have higher prices. That means higher inflation and slower growth,
Yep.
right? And slower GDP.
Mm-hmm.
And those two things together is either a stagflation type of economy or worse, right? And I'm showing the worst case scenario is that we get back-to-back quarters
Correct.
of negative GDP, which is a recession. The market has not adjusted for that.
Exactly. And that's what the market is trying to figure out. Should I price in a recession, or do I start looking through this that maybe there's going to be an eventual recovery? And that type of uncertainty inevitably pushes prices lower. Now, when you have a differentiated view from what the market is pricing in, because keep in mind, market prices are set by the people most eager to sell, or when markets are going up, the people most eager to buy. And it's really not reflecting an average view. And so if your view differs from what we call the marginal seller or the marginal buyer, then it can become an opportunity to position a portfolio perhaps for the longer term. You don't want to try to time these things, because we've always preached the importance of time in the market as opposed to timing the market. But when you do get dislocations in the market, it's an opportunity to take a step back and maybe take that more rational, less emotional assessment about what's going on, not just right now, but also about how things are likely to play out.
We have lots more to talk about. Economics and portfolio management. Folks, if this is making you nervous and you need some help, give us a call, send us an email, go to the Get Started button. We are ready, willing, and able to help you through this. And this too shall pass. But as Brian just said, this might be an opportunity.